U.S. stocks finished higher on Wednesday after a slew of robust corporate earnings, and President Donald Trump's new initiative on artificial intelligence pushed Wall Street indices closer to record territory. S&P 500 closes just shy of record level, and Nasdaq ends 1.3% in the green. Asian markets open mixed despite a positive handover from Wall Street. Taiwan market is shut today for public holiday. GIFT Nifty is suggesting a muted start for the Indian markets. Oil eases to one-week low amid a Trump tariff uncertainty and a likely fall in U.S. crude inventories, while safe haven demand pushes gold to near all-time high levels. Union IT Minister Ashwini Vaishnaw tells CNBC-TV18 that the first made-in-India chip will roll out in 2025. Also confirms that electronics component PLI scheme will be a reality in a couple of months. Says simplified duty structure is the need of the hour. That's an exclusive from Davos. In the Sun, Unilever Q3 earnings are largely in line with very muted expectations. Management expects moderation in consumption sentiment to continue, while BPCL earnings miss estimates as lower than expected GRM and a higher marketing inventory loss weigh on performance. Hello, good morning. You've tuned into CNBC TV18. You're watching Power Breakfast with me, Vinny Motiwala. A quick look at what the Asian markets are doing this morning. We have Taiwan index that's shut in trade today. It's a public holiday there. But Hang Seng, that's managing to hold on to some bit of a gain. Look at it, 1% gain coming in for the Hang Seng market right now. Shanghai also managing to hold on to decent gains of more than 1%. 1.5% is for Shanghai. We've seen Nikkei, that's the Japanese index, holding on to 0.5% of gain. The one that is not trading in the green is ESX 200. A bit of a muted start that's coming in there. But seems like a positive handover that's coming from the US market, coming in into the Asian markets, opening a bit on the positive note. Nifty implied open, a bit of a muted start right now is what we're watching out for. Now, it's just 63 points as of now in trade. Let's watch out for where it's headed. But muted start is what we're watching out for. Do not forget, yesterday Nifty managed to close with gains. So will that continue and will that sustain is something that we're watching out for in today's trading session. As of now, handover is not bad from the Asian markets right now. But Wall Street, that's also what we're watching out for, because that seems like an interesting handover. It climbed higher with S&P 500 hitting that fresh high levels there, as well as when you look at it, the tech stocks that rallied on the back of optimism in AI following Trump taking office. Now, Dow Jones, that rose almost 132 points. S&P 500 ended the day 37 points higher, while the tech-heavy Nasdaq climbed 253 points. We have CNBC's Bertha Coombs, who's joining with us to give us a wrap on what happened on Wall Street.
U.S. markets finishing higher across the major indexes in Wednesday trade as tech stocks rallied on AI optimism. The Dow jumping 131 points, the S&P 500 up 37 points, and the tech-heavy Nasdaq higher by more than 250 points. Elon Musk appeared to undercut President Trump overnight in a war of words with another tech titan, writing in a post on X that tech giants OpenAI, Oracle, and SoftBank do not have enough money to fulfill the pledge announced by the president Tuesday that the companies would invest at least $100 billion in the U.S. for AI infrastructure. Musk particularly called out SoftBank, saying it has well less than $10 billion secured. But OpenAI CEO Sam Altman, his co-founder, responded to the post Wednesday saying he thinks Musk is the most inspiring entrepreneur of our time, but surely knows that he is wrong about SoftBank's liquidity. Meantime, Samsung unveiling its new flagship line of smartphones Wednesday, the Galaxy S25 series with a custom chip and more AI features. The company says the new AI features are designed to make the smartphone more like a digital personal assistant, as Samsung looks to stay competitive with Apple and several Chinese players. That's what's happening here in the U.S. Back over to you in Mumbai.
Thank you so much for that. Now, while the U.S. CEOs seem optimistic about the pro-business administration, Jamie Dimon, CEO and president at JP Chase, says that he is cautious about the fiscal spending and the geopolitical risks, while Goldman Sachs' David Solomon says that the pro-growth agenda is the path for the U.S. economy. Listen in.
But what I'm a little cautious about is the deficit spending, and it's a global issue. It's not just an American issue. And the related, will inflation go away? I'm not so sure. And what if rates go up, credit spreads go up? Asset prices are already quite elevated. So that's kind of one issue. But the really important one is geopolitics. It's Ukraine, Iran, Russia, North Korea, and the related role of China in that. And that just got me very concerned how it's going to affect our world for the next 100 years, whether or not these things get resolved in the next couple of, year or months or whatever.
Well, first of all, the U.S. economy is in pretty good shape, as we head into this new administration. But I think the thing that I'm encouraged about, and as I talk to clients, I'm finding clients are really encouraged about, it seems like, and this is true in the U.S., it's true with the new administration, but I'm also hearing it in my meetings here as I'm talking to clients from Europe, et cetera, people are focused on growth. And if we can run a more growth-oriented agenda, if we can do some things that free up capital investment, especially private sector investment, that is a good path for us. And I think people are optimistic, and it's not going to be a smooth, perfect path, but people are optimistic that we are going to run a more growth-prone agenda. We're going to free up some investment. We're going to unlock the private sector a little bit more, and that's got to be constructive. And that is the best path for us at this point.
Okay, that's all the global overnight action that we have in today's morning trading session. But, what are we watching out for in today's trading session in the Indian market? How is this global action going to be impacting us today? Let's take a look at that. And, starting with the trade setup that we have coming in for today's day, do not forget, yesterday Nifty actually saw a very volatile trading session. Now, Nifty managed to close with gains of 130 points, which was up almost 0.6% of trade. Sensex closed with gains of more than 550 points, 0.7% of gain. But will this sustain? Because in the last few trading sessions, we've seen the Nifty flip-flopping between the red and the green. Yesterday, though it managed the green, today it'll be interesting to see that. Now, what happened yesterday also, that the broader markets didn't participate as much as we were seeing in terms of a performance coming in. There was an underperformance there. So yes, Nifty mid-cap was down 1.3%. Small cap also was trading with cuts. What was doing well? Nifty Bank managed green. We had Nifty IT that managed to hold on and was a top sectoral gainer. So IT names were buzzing in trade. FIIs, those continued to sell. They were selling for the 14th straight session in trade. So yes, Indian equities, they continue to sell. 4,026 crores is what the FI selling number yesterday came in at. Now, triggers for today, what we're watching out for: Wall Street, positive handover came in on that front because we'd seen new record high levels, almost near those new record high levels for the Wall Street. So S&P 500 was very close to that mark. So keep an eye out on that. Close eye on those Trump 2.0 policies that keep coming in. Anything new on that front, tariff front, is something we watch out for. Do not forget Indian markets, domestic market, Nifty weekly expiry is what we're watching out for. And in terms of earning reactions, we'll see a lot of earning reactions coming in. HOL, Pidilite, Gravita India, among some of these reactions. Nifty implied open as of now, indicating a bit of a muted start. So let's watch out for that. But yes, that's the trade setup, what we are watching out for right now. But we have Vamakshi as well as Mangalam also joining in with us. So Vamakshi, first coming to you. Which are the important stocks to watch out for in trade today?
Well, good morning, Vinny. First up is HUL. The company reported an underlying volume growth which was flat as compared to expected 1 to 2% growth. Margins were rather flat at 23.2%, and the net profit saw an uptick of 19.1%, and this was largely on the back of one-time gain of nearly 509 crores. The company, in addition to that, has announced 2,955 crore acquisition of Minimalist, acquisition of Vishwatej Oil India Private Limited for backward integration, and the board has approved the demerger of the ice cream business with the share entitlement at 1:1. BPCL, on the other hand, reported a weak set. Revenue saw an uptick of 10%. The margins have improved from 4.4% to 6.7%, but this is much below what the street was anticipating. In addition to that, the board has approved development plan for Nunukan block with an investment of $121 million. Persistent Systems, good set. Revenue seeing an uptick of 5.7% sequentially, in line with the street's expectations. EBITDA margin came in at 14.9%. This is higher than what the street was penciling in, and the net profit saw an uptick of almost 14% at 373 crores. Pidilite's revenue grew by 7.6%, came in line with estimates. Margin was flat at 23.7%. This is below estimates, and the net profit saw a slight miss. Nevertheless, it was up nearly 9%. And lastly, keep an eye out on Signity Technologies. Margins have improved from 12.1% to 14.9%, and the net profit is seeing a sharp uptick of almost 46.7%.
Okay, Vamakshi, thank you so much for that. But let's go across to Mangalam, who is here to tell us what's going to be happening in the world of F&O. What are the important cues there? Good morning, Mangalam.
Good morning. So yesterday was a decent day for the bulls, largely because of the big recovery that we saw from the lows. So almost 175 points from the lows. And it was Infosys and HDFC Bank led that recovery in the market itself. And ahead of the weekly options expiry today, the important thing to watch out for will be the GIFT Nifty indicating a slightly soft start. And that brings into account the lows of the Nifty. The last two trading sessions, the good part is that the Nifty, while it's broken that 23,000 mark in today, it's closed above 23,000. So the lows were pretty close to each other. Now the street is believing that maybe we could see some sort of support coming in at that 22,980, 22,977 itself. And that's how the options are positioned as well. 23,000 put writers fairly active in yesterday's trading session for a premium of 17 odd rupees. On the way up, 23,300 call writers, though equally active with a premium of 20 odd rupees as well. But remember, options expiry day is usually for straddle writers, the ones who write both calls and puts put together. So 23,100 call and the 23,100 put, both of them active for a premium of 120 rupees, telling you that the option writers are expecting an expiry range between 22,970, closer to the recent lows, and 23,230 on the way up itself. What is it that is putting a lid on the gains on the way up? We have the FII selling, which continues. 4,000 crores in yesterday's trading session in cash, almost 1,000 crores in index futures as well. But at the lower level, support comes in because, we are seeing some long positions being added. Net contracts are at negative 3.5 lakh and longs are at 18% itself. It's a more stock-specific market. I'm keeping an eye out on 4 stocks in particular. We pointed out the possibility of India Mart entering F&O ban yesterday. That's done that with PNB. And Kalyan Jewellers, that's the one that I'll watch out for because that's now out of F&O ban along with Angel One. Kalyan Jewellers has fallen about 43% in the last 7-8 sessions.
Okay, Mangalam, thank you so much for that. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll get you excerpts from our conversations with the biggest voices at Davos.
About India, we have them growing strong next year, consistent with what they grew this year. It's now moved to the 5th largest economy.
The Honeywell view on India and how do you see the next few years?
Domestic business doing extremely well. Can't be more pleased in terms of opportunities in India.
It is, and there are lots of reasons for that. One is because he's in a much stronger position in the United States than he was in 2017.
They're working on AI. They're working on all the innovative capabilities that we want to input into our products. A lot of that's coming out from India.
If I were to say even heart and mind put together, India is an exciting story.
India is going to be the office of the world. You and I discussed about it.
And here's more from Davos. Union IT Minister Ashwini Vaishnaw tells CNBC-TV18 that the first Made in India chip will roll out in 2025. He also confirms that the electronics component PLI scheme will be a reality in a couple of months. Listen in.
Just 3 years back, we heard that there is a semicon program starting in India. And today you have 5 units where the construction is in very advanced stage. And the first chip will roll out in this year itself. So that gives a lot of tremendous confidence to the people. So we just had a small kind of announcement that Inox will be the materials partner for Micron as well as Tata's.
Well, talking about policy measures and PLI scheme for the electronic component space has been talked about. Is that likely to be announced anytime soon, sir?
We are working on it and very extensive. As you know, we believe in extensive consultations with the industry. So that consultation process is practically in its last rounds. I would like to announce it once it is approved by the cabinet. As you know, that's the right way to do things.
And how soon before you take it to cabinet?
I think it should be, we should be able to launch the program in coming couple of months time frame.
Now, with a little more than a week for the union budget, sources have told CNBC-TV18 that the budget will look to front-load capex with the focus on infrastructure development, healthcare and EV sectors. Timsi Jaipuria is joining you with us to give us the latest update on what her sources are telling her and what we should be expecting here. Timsi.
Well, that's right. What sources indicate that the upcoming budget is likely to front-load capex with focus on infrastructure development, healthcare and EV sectors. Government believes that front-loading of capex will create jobs and thus boost consumption. Not just this, sources further added that budget is likely to boost road and highway construction, rural road construction. It is also going to allocate resources to accelerate railway track expansion. More funds will be allocated towards primary and secondary schools, colleges. Budget is also likely to enhance funding for creating and expanding AIIMS health clinics. Also, there will be a focus on funding for battery charging stations, building AI infrastructure. The budget is also likely to focus on funding capacities which need expansion in terms of semiconductor manufacturing, and the budget is also likely to support domestic shipbuilding operations. So now what we have to see is what Finance Minister Nirmala Sitharaman announces when she reads her 8th budget speech in the Parliament on 1st of February. Back to you.
Okay, Timsi, thank you so much for giving us the latest update on what we should be expecting from the budget coming in. But on that note, we're going to slip into a very short break. Viewers, don't go anywhere. After the break, we'll talk about the cues from the commodities market. So stay tuned in for that. Welcome back and thanks for staying tuned into Power Breakfast on CNBC TV18. Now, Microsoft CEO Satya Nadella clarified his position on the tug-of-war between AI and job cuts. Listen to his take on it.
AI does really help reduce the drudgery in a lot of our work. In fact, talking about software development, my first belief in all this technology came when I saw GitHub Copilot and what it did, because the joy of programming was something that was brought back because of AI helping me with the task in hand. So I think what AI does, quite frankly, is simultaneously reduce the floor and raise the ceiling for all of us. So that means the expertise level inside of an organization goes up, productivity goes up. I think there's going to be real new skilling, real changes in jobs. Even in software engineering at LinkedIn, for example, we've changed what used to be front-end design product into full-stack builders. So think about it, right? So the role itself, the complete scope and scale has changed. That, I think, reimagining of the labor force and the scope and scale, I think, is what's going to happen.
Okay, and now it's time to get you what's happening in the world of commodities this morning. Manisha is joining in with us as always. Good morning, Manisha. What are we watching out for this morning?
Well, Vinny, I'm looking at the crude oil prices falling every single day, and today is the 5th straight day that we're looking at prices declining, so much so that we've reached $75 a barrel now for the WTI prices, and the Brent has been on a declining mode. The U.S. crude inventories fell by 1 million barrels in the previous week. The markets were surprisingly taken by that. And then it also is about assessing the potential impacts from tariffs on China, European Union, Canada, and Mexico. That seems to be bothering all of these markets. U.S. already has warned of penalties on Russia if the war is not ended or the work is not begun towards that. So it's a state of uncertainty, and the crude oil prices really is getting sold because of that. Also, when you look at the markets, the OPEC and allies production has been higher. The Saudi Arabia oil exports hit many month highs in the month of November at 6.2 million barrels per day. But what has actually seen gains has been the precious metals. The gold prices globally are trading at a 3-month highs. And for the Indian markets, the gold prices hit all-time highs yesterday, and the markets as of now also trading around that. So safe haven buying clearly top of mind.
Okay, Manisha, thank you so much for that. Keep an eye out on the coal prices as well and where they are headed. But with that, we are absolutely out of time on this edition of Power Breakfast on CNBC TV18. Thank you so much for tuning in. Up next, your Bazaar Morning Call.